Well, you, of course, are on the Good News Channel, and as the market is getting slammed again today, I thought I would bring you something positive here at the very outgo. So, a lot of people think that maybe there isn't that much that could happen between now and earnings, and that we're just to be in this kind of boring point with regard to Tesla. I got a list of 10 things that could happen between now and earnings. Now, that doesn't mean that all of these will, but pretty funny. Even as I was writing this yesterday, two of them did. So first of all, the M3 Plus, the Model 3 Plus is probably going on sale March 1st, and maybe we'll have an official announcement between now and the beginning of, and we had much more information and news on that yesterday, suggesting that was going to take place. Number two, evidence of the Cybertruck ramp. We're definitely going to see that. We'll know a little bit more about how many of those Cybertrucks are leaving the building and getting onto trailers. Number three, the V12s could start to roll out. That is a very strong possibility between now and then. Number four, actual groundbreaking in Mexico. That could happen. That's going to happen pretty soon. Could happen between now and then. Number five, earth-moving equipment could start to be seen in Reno. Yes, they're not allowing the overflies by the drones, but you can't really keep it a secret if you got a bunch of moving equipment going on. I mean, earth-moving equipment going up there. Number six, hiring hints on production lines at any factory. Hopefully, Tesla Boomerama was not serious when she said she wasn't going to continue to monitor that, and we'll hear about that. Number seven, the first fruits might be coming out of Corpus Christi refinery. We did have reporting on that yesterday, showing that the refinery is coming along just great, and we're supposed to be hearing some certification news very soon, and that could happen between now and then. Number eight, there could be another mega factory announcement. Very likely, but maybe not in the next 20 days, but it could happen. Number nine, beginning of advertising in earnest. So we saw some nibbles and new little videos coming out, but now that team has been assembled, maybe we'll start to see some significant numbers of YouTube videos being produced. Number 10, and videos in general on X, etc. Number 10, quarter one sales forecasts. As evidence of demand starts to take shape, we might start to see some stronger forecast if we see evidence of a stronger year than some are expecting. All right. This is in other financial news this morning. I was worried that Cybertruck bottle openers sales would drop after the Christmas season. But alas, it turns out in the first 2 days of the year, sales have been absolutely crazy. So keep those orders coming in. You know the deal. It's now 25, 45, 65, 90, 110. All that information is down below. Send it off to paypal.me/Randy Kirk, all lowercase letters. All right. Later today, we have Brian White, who has some unbelievably intriguing thoughts to share. You don't want to miss that at the midday. And Jeff Lutz is co-host tonight. We got a lot to think about, a lot to talk about. Jeff and I want to really hear what he's got to say about this weird opening to the year with the NASDAQ down and the bonds down. And my goodness. Anyway, I wonder, though, about this, the bonds continuing down this morning, yields up, bond prices down. I wonder this morning if there's a bit of an overhang of concern about interest rates. Everybody was thinking interest rates will come down 3 times, 5 times, 7 times this year, and starting in March. And so this morning there was a Fed president that came out, and I'm going to talk about his speech. We're going to be going a little long this morning. It might be out a little late because of it, because this Fed speech was pretty insightful, and I want you to hear the details of it. Anyway, that'll be at the end. And bond yields seem to be impacted by it. They were already headed up this morning, and then after the speech, they went up even more. So we'll see. Tesla is always going to react to the interest rates, and it's down 6 additional bucks this morning in the early going. This is not investment advice. That seems like an entry point to me. Okay. Sawyer Merritt says this morning, breaking, Tesla Cybertruck is officially the most American-made truck overall. The Cybertruck has 90% North American parts, including 65% from the U.S., Canada, according to their Maroni sticker. The Ford F-150 Lightning has just 38% U.S., Canada content, and their ICE version only 30%. In mentioning the technological breakthroughs the other day, I really should have added this one. Here comes this from SpaceX this morning. it says the 6 Starlink satellites that went up this morning, 6 of the satellites that went up this morning had direct-to-cell capability, which will further global connectivity and help to eliminate dead zones. Of course, probably every launch from now on is going to have some of these direct-to-cell satellite capability satellites going up. Elon says about that on X this morning, he says, this will allow mobile phone connectivity anywhere on Earth. Note, this only supports 7 megabytes per beam, and the beams are very big. So while there's a great solution for locations with no cellular connectivity, it is not meaningfully competitive with existing terrestrial cellular networks, at least not now. All right, Gary Black, you know what I mean, right? If not, let me know in the comments that you need more of an explanation. All right, Gary Black says this morning, in on X, he says, and that, by the way, it's Gary Black 00 is how you find him. The $25,000 next-gen vehicle has to be the highest priority for Tesla. Does anybody think that? I don't. It only took me 2 seconds to think about it. I responded to him. I said, in my humble opinion, priorities would be Optimus, FSD, 4680, energy storage, Cybertruck ramp, Semi. All of these will make more profit than the Gen 3 vehicle by many multiples. Let that sink in. Everybody's all concentrating on the Gen 3 vehicle. I'm sorry, all of those things I just mentioned are significantly bigger profit makers and are right now. I mean, these are things that are top of the list for what I think Tesla should be doing. All right, from Still Gray. STILLGRAY on X this morning. He says, without X, by the way, you guys mentioned you wanted to hear more about the other companies, the other Elon Musk companies. So these are 2 examples. All right, without X, Claudine Gay would still have her job at Harvard. Most people, academics, tech leaders, etc., would still be afraid of speaking their minds and saying all the quiet parts out loud. Free speech provided by X and Elon Musk has enabled a newfound degree of freedom. We have the first jobs report out today. Later, I mean, it'll be coming out right now. Unfortunately, I won't be able to report it till tonight. That's the job openings or JOLT report. But Indeed, the Indeed folks, the ones that, are the number one, I think they're still number one. Yeah, anyway, whether they are or aren't, this is what they said about job postings on their platform. Total job postings as of the end of 2023 declined more than 15% from a year earlier, according to data from the job listing site Indeed. The pace of descent seems to have leveled off a bit in the second half of the year, said Nick Bunker, an economist at the job site. Job postings are still up by more than 25% from their pre-pandemic levels, Indeed's data shows. But the frenzied hiring and worker shortages that marked an earlier phase of the pandemic recovery are fading, even as unemployment remains low, boosting economists' hopes of what is a soft landing. Well, in fact, I would say that's strong. Still being up 25% from pre-pandemic levels and only being down 15% from last year. That's still pretty strong. On the other hand, I am definitely not hearing the panic in the voice of anybody out there in terms of finding people to work right now. Yes, it's still hard, but not the panic that we heard a year ago, 18 months ago. Barron's has this breaking news, and here we go. Federal Reserve President and CEO Tom Barkin had this to say. I think it's very well worth listening to. I suggest you hang in here till the end. Forecasting is difficult and conditions are ever evolving, of course. As they do, so too will our approach. So buckle up. That's the proper safety protocol, even if you expect a soft landing, Barkin said. Currently, Barkin sees 4 major risks to a soft landing scenario in which the Fed gets inflation back to its 2% target without a major economic downturn. A soft landing is increasingly conceivable, but it in no way inevitable, he said. Now, he says as they get it back to 2%, as you know, I'm very concerned it's going to go, not concerned. In fact, I'm sure it's going to go right through 2%. Anyway, down to maybe negative. The first big risk, he says, is that the economy could stall as a result of the delayed net effects of restrictive monetary policy. You have heard Larry Black and I say this over and over and over again, which is why I'm not as concerned about whether they lower interest rates as I am about whether they start to be less restrictive in monetary policy. Number two, I'm sorry, last year he says we raised rates to put the brakes on the economy. We didn't end up losing as much altitude as we might have thought. Credit conditions tightened, but didn't make the economy stall. Yet Barkin noted that at least some recent data suggests that corporate interest payments as a percent of revenue and household interest payments as a percent of disposable personal income have both returned to pre-pandemic 2019 levels. If consumers and businesses pull back, that could push the economy into a hard landing. So you only have so much money to spend. Right now, you're not spending as much at the gas pump, but you're spending more on interest. That's all keeping you from buying a refrigerator. Does that make sense? That's not him. That was me. Okay. Barkin also noted that there's always the possibility of unexpected shocks, including geopolitical events, a cyber shutdown, and even potential spillovers from troubled sectors or banks pulling back and forth, similar to what the U.S. experienced a year ago. Such shocks could bring inflation down, but at a potentially large cost, obviously. So black swan events and other kind of crazy stuff that might happen, continued war, more war, the whole Red Sea thing right now, of course. Next, the inflation rate in the U.S. has come down. The personal consumption's expenditures price index inflation was down to 2.6 year over year in November from the peak of 7.1 in June 2022. But Barkin noted that much of that disinflation has been due to the normalization of goods prices following the easing of supply chain challenges brought about during the COVID-19 pandemic. Okay, this is what I've been saying. This is boom bust. It's totally to be expected, but it's continuing. He doesn't say that. He does say that shelter and services inflation remain at higher than historic levels, presenting a risk that inflation could level off at a higher rate than the Fed's 2% target. What is he talking about? Rental are down. They're like at 1%. They're already under the 2% goal that has been set. And the inflation on homes, on private residential homes, is partially due to the high interest rates. Anyway, and it should be coming down. It'll probably take until third quarter of next year before we see a meaningful drop, although you'll have probably some normal drops over the winter, as I've been saying multiple times. Additionally, Barkin worries that many businesses are planning above normal price increases that could stall further progress on bringing down inflation. I hear none of this. Where is he hearing this? Is this something that he's getting from people that are talking in his ear? Because Costco and Walmart both said, no, prices are headed down. After decades without pricing power, businesses, especially those facing a margin pressure, won't want to back down from raising prices until their customers or competitors force their hand. I agree with that. That's absolutely true. Barkin said, if that's the case, I fear more will have to happen on the demand side, whether organically or through Fed action, to convince price setters that inflation era is over. Do not agree with part two. The final area that Barkin is carefully monitoring is the risk of continued surprising strength from the U.S. economy. That was certainly the case in 22 and 23 when consumer spending and labor market continued to surprise economists with unexpected resilience in the face of 11 rate hikes. That could continue into 2024, Barkin said, noting that it's hard to make a case for a pullback in consumer spending so long as equity values are high and the labor market remains relatively tight. Strong demand isn't the solution to above-target inflation. That's why the potential for additional rate hikes remains on the table, he said. Yes, but I don't think, it would take me too long. Maybe Jeff and I will talk about this tonight. Yes, the economy is going to remain strong, maybe stronger than the Fed would like, but the disinflationary impacts are going to come from huge productivity gains as well as the normalization of prices. And to some degree, something we haven't started talking about that much is that Europe and China are not doing that well. And China is, in particular, we're starting to see their deflation being exported to us. But even if the U.S. economy does weaken this year, Barkin said it's worth remembering that not all slowdowns are created equal. There's no evidence that the U.S. is headed towards a massive recession like that seen following the 2008 financial crisis. Now, if a slowdown does come in the near future, the economy could find itself less vulnerable, Barkin said. Well, okay. Now, this is a biggie I found this morning. Sometimes there's a drip, drip, drip. You don't see it until the sink is almost full, right? The bond inversion has moved a lot in the last 2 weeks, and I wasn't noticing it. While the difference between the 10-year and the 2-year has been about 500 basis points for months, it is now down to 350 basis points. You heard it here first. Nobody's talking about the inversion or the reinversion of the inversion. Nobody. I mean, really, there's just no headlines. If you see one, please send it to me. You're seeing a continuation of the action in all of the markets from yesterday. 30-year Treasury yields up, markets down with the NASDAQ leading. And this obviously was carrying Tesla with it in the early going. Let's see where the numbers are now. Let's start, as always, with Tesla, and it's not going to be good, I don't think. Oh my goodness, down 9 to 239.26. Very unexpected on my part. I can't imagine what is. I mean, yes, interest rates going up would not be good for Tesla, but this seems to be an overplay. Maybe there's news that I haven't heard. Let me know in the comments below if there's something crazy going on. Down 9 at this point. Dow Jones down 174, NASDAQ down 103, S&P down 27, and the Magnificent Seven is mixed, but right around break even, except for NVIDIA, which is down a full percentage point. Let's look at all of this in percentage points. We have got the Dow Jones down 0.5%, NASDAQ down 0.77, so the NASDAQ again down more than the Dow, and the S&P down 0.6. Tesla, though, is down 3.76. I'm suspecting something has happened here, or maybe somebody has unloaded a lot of shares. This is not anything what I would have expected this morning. Okay, and we've got all the Cathie Woods down and about those kind of levels, 3%, 4%, 6%, 3%. So it does appear to be the bonds that are maybe impacting and Tesla being treated like a Cathie Wood stock. We've talked about this over and over again, so that could be the whole thing. Anyway, let's take a look at those bonds real quick here. All right, so we've got the 10-year about the same as the pre-market. It's the yields are up 4 basis points. Almost at 4%, but not quite breaking through the 4% level. This, again, I didn't expect, but it could be what I just mentioned. Maybe the market is a little nervous about the rest of this week and the Fed minutes later today, the employment numbers later this week. Maybe they're thinking that we won't get the interest rate reduction in March, and so there could be some nervousness going on there. But we do have the 2-month actually down, interesting, on the inversion, and the 2-year not quite as much down as the 10-year. I'm sorry, the bond's down, the interest rate up. It is up, the 2 years up, 3.5 basis points compared to the 10-year up 4 basis points. All right, let's look at oil. Let's see, here we go. We have got oil this morning up $1.30 or 1.85%. Brent about the same. That was on Texas Intermediate. We've got Brent about the same. Natural gas up 5% this morning. So once again, what are we looking at here? Are we looking at the dollar? The dollar is up strong this morning because of what's happening in the bond market. And oil would normally is responsive to that as the price of the dollar goes up anyway. And natural gas up 5. That's huge. Well, but natural gas has been so volatile the last few days. All right, we've got gold down. So that's what you would expect with the dollar up. Anyway, it's at 2,045. That's still strong for gold, but down from where it's been. It's been around 2,075 for a while. We've got silver down 3%. We've got copper down almost a full percent. So interesting this morning. What a crazy deal. And of course, Bitcoin, now everybody's saying, well, maybe that ETF isn't going to happen this week after all. So it is down 2,700 at 42.2. And yeah, okay. So yeah, so the year is opening up wild. What does it mean if the first week is wild? I've seen all kinds of suggestions. The first week, if it's up or down, will tell you what the year is going to be, especially if the first week and all of January are up. That means an up year. If the first week and all of January are down, that means a bad year. But what happens if the first week is just wild? I mean, it's down, so that would go along with that one theory. But what if everything is all over the place? Yeah, well, I've reported as much as I know right now. I'm not making any guesses except that I think the fury will fade, but we'll see as all the rest of the reports come out this week. So be sure. Oh, let's go back. Just one more. Let's look at Tesla again here, just for fun, or not fun. Actually, this morning, still down 8.32. So ticking up just a little bit from where we looked a minute ago. We'll look one more time before we end here. Be sure to check out the Larry Goldberg video from yesterday. It was phenomenal. It was insightful. It was useful. And of course, hopefully my engagement with Larry made what he was talking about even better. Maybe not. Let me know in the comments below. And then he gave a great look at all of 2024 and where he sees things going. And it's interesting how from where he was coming from, he came up to some of the same conclusions that I did about this huge convergence of technologies at Tesla, which the street has no idea about. It's just amazing. And then Nick, last night, he hadn't even seen the videos on the convergence, and he named off the 5 items just like that without hesitation. It was quite interesting last night. But I'll put a card up for the Larry video from yesterday. And then join Patreon. So thankful for 3 people already this year joining Patreon at the $3 level. We've now got the $3 level because people had asked for it. So you can join at the 3, the 5, or the 10. Go on down below, take a look at that, and you can support the channel. Remember, your support for the channel means more people learn about Tesla. More people learning about Tesla means Tesla sells more. More people that buy Teslas end up more people that invest in the stock. And that's going to help your investment future. So $3 a month or $5 a month or $10 a month could actually be one way that you could impact your actual investment future. So that's in my personal opinion, not investment advice, but $3 a month. I mean, how much could it cost you? Anyway, okay. So Cybertruck, bottle openers, you want one. I'm serious. The first 2 days of the year have been better than December and way better than my projections. So keep them coming. And all the information is in the description on how to do that and how to join Patreon. And seems like there was something else, but I guess maybe not. So one last time, as usual, we'll look once again. Yeah, it's $8 down. $8 down. Yeah, that's where we are. Hey, it's been great talking to you.